More than 20% of the US has stopped buying the extra coverages on their car insurance policy. Let's dive a little bit deeper and find out exactly what's happening and why these policies are so far from what they used to be a few years ago. Essentially, car insurance is being labeled as unaffordable. In a recent report from Jerry, according to Property 360, is that we're seeing about a 19 to a 22% increase in premium. That's from one year to the next without any changes. So part of it, yes, we know is the value of the car and the repairs and the length, longevity, and all of those precious metals as we talk about. But why is the car insurance going up so much? I'll link a video at the end that it goes a little bit further into detail on exactly what is causing some of these changes and why you're seeing these increases. But in general, I don't necessarily recommend that you do what every article under the sun says, which is shop around. Yes, don't get me wrong, I'd love you to check the link below and there's a way to shop with a ton of agents, but that's not always the answer. Sometimes you don't just need a new policy, you have to review what you've got first, find out what may or may not have changed first before you jump into that boat. Yes, I personally think that you're going to see a 20 to 30+% increase on your car insurance going into 2024 and going further. Now, I think it's going to level off. So what we're going to call insurance got cheaper is that everybody's gone up by then. So even if you leave the company you're with now, doesn't necessarily mean they're going to be the best option later. So let's check and find out before you join a new company if they've already had rate increases. I know that companies like Progressive and Nationwide and Safeco and a few State Farm in certain states, and a lot of those companies have already done their rate increases. So when they're less expensive, we know that's likely a good fit for somebody because they've already gone through that piece. Now that they're comparing to what someone else has, it's going to be a bigger difference. So what is everybody doing to combat that price increase? A lot of people, without changing anything, are doing what's called a telematics, or UBI, a usage-based insurance program. And what that does is it basically tracks your driving record. Honestly, a ton of my videos on here, which are probably in my top videos, are me testing and going through and reading the results and what those are. So feel free to subscribe to the channel. There's tons of this stuff on here. But that quick version, if you want to know exactly what they're talking about, is you plug in a device in your car. Or the newer version is you bring up your phone and you download an app and it tracks you for 90 days. Be careful because some companies go beyond the 90 days and do it forever. So personally, I'm not a fan of those. And if they're gonna track me forever, then why do I gotta constantly have to prove myself? I get it, it makes sense if you become a bad driver 1 year, that's few and far between, but there's so many other options that you don't have to do that with. So the majority of people, and I think it said 40 or 52% of the people are actually using the usage-based insurance to combat that. The positive is if you know you're driving low mileage, companies like Nationwide are going to give you a better deal. They have something that's called Smart Miles and Smart Ride. The Smart Ride is that test, that program that does it, but they also have the Smart Miles, which means you pay a lower base fee, and then you can just pay to have that usage tracked for the first 90 days. That's one of the benefits that they have. So those that are driving less than 8,000 miles a year might get a better price on that policy. Now, if you are shopping around, I'll put a link in the description below. Feel free to check us out. We work with multiple companies, Nationwide included. If you are one of those people that is a good fit, make sure you tell your agent because they're not going to naturally just think of it. Most people don't ask for that. And most of the time, the average mileage is 10 to 12,000 per year. Gone up a little bit this last year, but in general, we just assume that the majority of the people we talk to don't need that Smart Mile. Mark, when is this supposed to turn around? When are we going to fix all this junk and all these problems? It's going to happen, according to this article, and I 80% agree with it, is the middle of 2024. So come the middle of 2024, you're going to start to see these prices stop skyrocketing and level off. And then all of the other companies are going to follow suit. They're all going to be catching up with each other. I've seen one company raise the rate 3 times in the last year. So they're all trying to play the game of how do we stop the losses that we have. And this is actually one of those scenarios where the insurance companies aren't just saying, I want to make more money. They're literally losing money this time to the point where you're noticing certain states no longer have State Farm or Allstate or Progressive or all of these main companies because they just can't afford to stay there. That's why if you go to an agent, make sure that you're working with one that's trustworthy. Check their Google reviews, look at their website, make sure they're not just doing things to make a quick buck. That's what this industry has started to become, is the sales agent mentality, not so much the actual agent advisor. So yes, I do agree, near the end of the year, I think we're gonna start to level level off, and to the point where we get into 2025 and going forward to where I think the insurance companies are going to shift to where they're almost probably making too much money. Now we're going to go back to bad insurance, bad companies, you're taking all of my money, because they can't make these moves quick. Your large companies like State Farm or Allstate or whoever you're talking to, they have to move and shift at a slower pace because it affects a whole lot of people and a whole lot of things. They make the wrong move, underprice something or overprice, they either get sued or they don't make enough money to overcome the claims. So they're trying to play in this little box to make it fit where they can make money, reinvest that money, so on and so forth. So 2025 and going forward, I think what's going to happen is we're going to see lawsuits against the insurance companies because they don't have a way to pivot quick enough. And honestly, I don't think they will pivot much, if at all. They'll probably keep those high rates because everybody else is starting to play catch up. And when that happens, they're going to be overcharging customers. So going into 2026 and beyond, I think what's going to happen is we're going to see a lot of these states come down on these insurance companies saying, you should have pivoted back down. You should have dropped the rates 10% or 5%. Guess what? You now owe all of these policyholders at that time $100, $200, which to them is millions, if not billions of dollars that they have to pay back. It hurts. The next biggest way that you can combat that is to check the discounts that you have. There are so many discounts that you can get on your insurance. It's not just the usage-based insurance. You can go with claims-free discounts if you haven't had any accidents. Get a company that will offer that. Not all do, but a lot of them do. The longevity, if you've been with one company for 5 years or more, odds are shifting to another company or doing a quote and finding out what rates are out there, you're going to get a better deal more often than not if there's similar companies. It's a matter of whether you're a fit for that company or not. For those of you that are in the outed states, so you got California and Florida, unfortunately, I don't think you guys are going to see anything positive anytime soon. You're going to be a little bit behind on that trail of the prices evening out. Now the government, I understand, as much as everyone's frustrated with them, they're trying to fix it. They're trying to keep the insurance companies in-house, but guess what? That means they're going to raise their rates more than they normally have in the past. That's one of the biggest pieces that they're having trouble with, is because they're trying to price their models for certain weather conditions, for certain claim areas, for certain things, without letting them be discriminatory. They can't necessarily just say this area is bad, so we're going to quadruple the rate. The states have now opened it up and says you can't just pick that zip code. It's not fair. Nobody's going to insure them. Now we've got people uninsured. It's going to affect all the areas. So they've forced them to do a larger territory to where now these territories are bigger. That's another reason you're seeing that the rates are going up in some territories now. You may have been in a great zip code before, but because a lot of these states are breaking them into territories, you're now mingled with okay territory, and your rate may be affected because of the people around you. You're at a higher risk for claims and things like that. Like I said, there's a lot to research, and if you want kind of the quickest route to go, I'll link my Discount 101 video here. First and foremost, before you check that out, I get having the best price is good. You must know what coverages you have to have. So I'll put my Car Insurance 101 that goes over the specific coverages. We'll be remaking it this year, so subscribe for that when it comes live. Otherwise, I'm Mark with Think Insurance. I'll see you in the next one.